Hello everyone, the Chart Guys have been working on an introductory technical analysis course for quite some time now, and after surveying hundreds of traders with what would be the most sought after information regarding technical analysis, we came up with this course, When to Enter and Exit. It covers over 5 hours of the basics on when to enter and exit, and we feel after watching this course it will help build a foundation of technical analysis knowledge which will eliminate a lot of the uncertainty in the world of trading stocks. So the course outline, we go over the psychology of trading, establishing a game plan, the different indicators we use to signal a bullish and bearish entry, how to recognize support and resistance levels, poor entries, where traders make mistakes, exit targets, how do you know where to sell your trade, where to place stop losses, that's very important, minimizing losses is what keeps you in the game long term, my personal preparations, how I go about getting ready for each trading day, and then piecing it all together, utilizing all the information we just learned and how to apply that in the real world for making successful, profitable trades. As a bonus, we also include a lot of information on finding entries and exits utilizing patterns, and you can find these patterns on every time frame on pretty much any stock and commodity trading, and certainly being able to recognize those patterns can give you an edge as well. So we hope you will check this out. Again, it's an introductory level course. So if you are new to technical analysis and trying to get a firm grasp on things and feeling a little bit overwhelmed, then this course is for you. I hope you check it out. Appreciate you watching. Checking in on Facebook daily, weekly, shorter term time frame. So another pullback day. The bulls buying the dip again, not as significantly. And we have earnings tomorrow after the close, so pretty much where we're set up here, if it's a bull reaction, we're going to see a new all-time high. If it's a bear reaction, we're looking at 126.78 and then down to 124.06. So it's going to be a favorable position for the bulls where we currently stand on the weekly time frame because we are so close to that all-time high, and the ideal scenario for the bulls is a blue sky breakout, but a bearish reaction, and we'll be looking down at previous support levels. So Google had a bearish earnings, Apple had bullish earnings. Really no way to determine, and that's why we don't play earnings. We play the reaction to earnings and the overreaction and the overexuberance to the upside and the bearish fear to the downside. We like playing those overreactions, and emotional traders and investors magnify those. But otherwise, unless you're doing significant research into the fundamentals, and by significant I mean dozens of hours, you are just guessing and flipping a coin, and that's not a good way to be making money in the long run. Sure, you might win some, you might lose some, but you really want to have the odds in your favor more often than not. So Facebook on the hourly time frame, let's see where we are standing. We have a bull break of that 20 period at the end of the day. After it rejected the price after hours and pre-market, one last moving average to get above on the hourly, 130.81, and it's making a nice channel between the 200 period and the 100 period. But again, I don't expect any significant action tomorrow as we do head into earnings. Facebook had a clear turnaround from the low to the high, where we had a low of the day at 129.60. And why does that level come back into play again? Because that was a triple bottom yesterday. We had a descending triangle pattern, and we had another one today. So let's look back, because these patterns are very clear and recognizable. So we had a triple bottom at the low of the day, 129.60 yesterday, with lower highs, and then that clear bull break. If you saw the video, I highlighted that. So today we had that same triple bottom. Look at the low of pre-market, 129.93. Low of the day, 129.94. And then it dropped down to 129.95. So you draw a horizontal line across, hitting those supports, and we see a clear lower high pattern as we approach them. Bulls broke. It was a fake out here. We had a bull break of that pattern. So the potential would have been to make a bullish entry on that break, and then you would have stopped out at break even, ideally, or maybe for a small loss as it turned around. But there was a clear signal to go bearish once we broke that triple bottom at the low of the day. And as soon as that level broke of 129.93, we dropped down and hit the low of 129.60. So not a ton of gains to the downside, but again, weekly options. The premium is going to be pretty high on these weekly options due to earnings coming in. So personally, I don't play options that do have really high premiums because their earnings are that weak. But if you did, there was some gains to be had there. And then we had the bullish break at the end of the day. But again, in terms of the amount of premium that there would have been on those options, not a ton of opportunity in either direction. So tomorrow, pretty much a coin flip heading into earnings. And if it's a bull reaction, we'll be set for an all-time high. So we'll check back in tomorrow and see what that reaction is like. And that will give us a lot more direction in terms of whether we're looking at psychological resistance levels in blue sky breakout or whether we're looking at previous support levels that we established on the way up. So I'll see you then. Thanks for watching.